Good morning, good afternoon, depending on where you are. My name's Alex Kakande as we continue to learn about treasury bonds. One of the best benefit of investing in treasury bonds is that you'll never be defrauded. For as long as you do the right thing and you fill up the right documentation, you will never be defrauded. Now, the keyword here I'm using is defrauded. You never lose your money. You get your bond, it will be in your names, and you'll be paid every single time, whether you're buying from the primary market or the secondary market. And I do understand majority of us are going to always buy from the secondary market because the primary market happens once a month, and sometimes the bond you want might take more than 60 days before it comes back on the primary market. So what do? You buy on the secondary market. But unfortunately, if you do not understand the market, you can easily pay a premium where you should not have paid, especially for people who are starting this treasury bond journey right now, that they do not know how it means, how they price the bonds, and everything. In that instance, if you are one of those people, you are trying to buy a bond of 10 million, 15 million, 20 million, and above, it might be beneficial you get an advisor to help you negotiate the price of the bond you are trying to buy. This video is to demonstrate to you how sometimes when you don't know what you're doing, when you don't know what you have to ask for, how you end up easily losing money. You get how you end up losing money. So, one of the understanding when it comes to treasury bonds, and I want people to appreciate this, is when you are to buy from the secondary market, the best way to do it is to go to your bank, your custodian bank. It might be whatever tier one bank you are dealing with, but that doesn't mean you're going to get the best deal possible. You know, these are the deals that were executed yesterday by people who bought on the secondary market. I'm highlighting, I'm going to compute it. I'm going to walk it through one by one, right? The first one is this one, someone who of 74 million, right? Let's look at this Excel. The yield to maturity that was given to him was 16.5. You can see that's the figure that I want us to pay attention to, 16.508. Perfect. And they got a bond. They bought a bond at a face value of 74 million, you know. So when did they buy it? Yesterday, which is today minus actually 1/19th. Perfect. So then you have to ask them, how much did they pay? At 15.08, they paid close to 70. I'm actually wondering why they even paid more money than what they should have paid. Let me see, what have I left out? 74,400. Perfect. So they bought a bond of 74,400. And this is the amount they pay. At a time, they bought a bond when there was an auction happening, and that auction came in at 17.5. Right now, that bond you should be buying it at worst, right? So this is what someone did, and this is the amount they paid. And let me duplicate it here for me to demonstrate it very well for you. What? If I was the one advising them, this is what I would have got them. At worst, I should be willing to get them a 16.9. And 16.9 means they paid more money, because for them, they paid 70 million. I would have got them a bond of 68 million. So they would have saved the 1.5 million. You know, by buying the same exact bond, we are paying different prices. That's what the secondary market is about. If you do not understand it, you easily lose money. Now, this person lost at least 1.5 million, at least. But if they had come to me at a better rate, I would have even get them a 17% and above. So that's the advantage of when you engage financial advisors who understand the market and will negotiate the right price for you. Let's look at it further. Let's go to, this is a deal, this is open. This person who bought, let's continue with this person. This person who bought the bond yesterday and got a 17.45 million, they got a very, very good deal. Very, very good deal, you know. So that one I cannot, this one I cannot even talk about it. But the fact that they bought it on the secondary market, chances are they bought it from someone they know all they were selling, because sometimes it's hard to tell what is a sell, what is a buy. But let's continue on our evaluation. Now let's come down to this here. This person here bought a bond of 310 million. He has a lot of cash. And I always tell people who have money, engage an advisor. You're going to pay Alex 600,000, but they're going to save you how much money? Let's look at it. They got the bond of 16.233, you know? So let's put it here in our computation. 16.233, you know? What was the face value of the bond they bought? 310 million. So it was 310 million. That same bond, so when we come back here, how much did they pay? They paid 296 million. When you look at it, what they paid, this is the all-in cost, 296 million. If they had used an advisor and they use someone who understands this market very well and who can easily negotiate a very good deal for them, this is the price I would have delivered to them at a bare minimum. And this is a minimum that I've set, that I know right now that when someone comes to me and they say, Alex, help me to buy a treasury bond of 10 million or 15 million or 20 million, the value I'm going to deliver to them, I would have saved them 10 million. So why are they paying 10 million over and above just because they do not want to consult? Now, in the treasury bonds, it's not complicated, but also not knowing sometimes makes you lose money. The question is, someone would ask, how come right now we are in 17, 16.9, yet the auction took place yesterday? This is what we see. There was significant, the bids people tendered in, where you can see almost 2 billion, 2 trillion, this column, right? Government got tenders of close to 2 trillion. I need to add a commentary here. Bids of 2 trillion. Yet the amount accepted was 1 trillion. So that means they rejected over 1 trillion in bids, and that money is out there in the secondary market chasing money. So they, of course, that means rates have fallen down, but they have not fallen down for someone to come to buy a treasury bond. For example, let's look at this other person of 100 million. They got an interest rate of 16.1. You know, this is what they go to the bank, 16.1. How much did they buy it? 103,800. 103,800. You know, they paid 100 million. See, 100 million, that's what they paid on the exact day. What I have computed here in red, that's what they got. How much money did they lose in such a transaction? Close to 4 million. So now every time you're buying a 40, a 10, 100 million plus and you're losing 4, 5 million, that's not how to do it, you know? For that exact amount of money they paid, if they had more money, they would have got a bond, a higher bond. I would have delivered them a bond of close to, let's say, 109, 110 million. And it's not me alone. There are quite other people who actually are doing this. They understand the market, they will negotiate for you. You just have to be willing to pay a little bit of a price for them to help you negotiate for you the right price of the bond. Do not just follow play. You will not lose the money. Even this person got their bond. You can see it got registered on the secondary market, you know. But let's look my last example, which is the most painful one, and I'm going to put it in red. Is this person, right? They got a 15.4 million, 15.4%. So at for them, they got a 15.4%. They bought a bond of 100 million. Now, God knows who advised them, but they did a terrible job. So they paid just 100, exactly 100 million, which is a good investment. It's still a very good investment, right? The net return they are still getting is of 13.5, which means when you put in what they have invested in, it's still 13.5%. However, if that person had used a very genuine advisor, a very good investment advisor who understands the intricate treasury bond market in and out, who can easily get a call and get them the right deal, that person would have paid what? 92 million. So they lost 8 million more. At a bare minimum, that person would have got at the same amount of money, you know, at the same amount of money that person would have got 108 million. You know, they would have paid more or less money and they would still have got a higher bond and they would be getting 9.2 million instead of 6.75%. So, whereas the treasury bond market is still delicate, it's still transparent, there is a few things that we need to get straight. When you are buying from the secondary market, engage an advisor. If you go to the bank and they give you to open up your CSD, open it up. When they give you the pricing, the first pricing they give you, and you do not understand if it's the correct price or if it's a better price or if you can get a better price, and you don't know where to go, reach out to me. Just say, Alex, here I am. I'll help you. For you, if you're buying a 10 million bond, 5 million bond, I might not even charge you. I might just charge you the time, which is maybe 100,000. If you are buying a little bit more pricing, that's the only people I will charge a little bit a higher price, maybe 500 or 450 to help you broker this deal. But for as long as I'm saving you money, you will see it. So you go to your commercial bank, you tell them what the price is. Get that price. Do not rush into this. The bonds are not about to get done. My number is easily accessible. Reach out to me. I'll help you look for the treasury bond and we shall invest together. Let's walk this journey together. There is so much to benefit from it, but do not fall prey. Do not be like this last person who got a 15.4. They lost almost 200 basis point. They paid over 10 million over and above. Do not pay this person who lost almost 100 basis point and lost almost 6, 7 million and above. This person who bought a bond of 300 million, they lost close to 12 million and above, and so many other examples of people who are buying these deals. You can see more and more people are coming in to buy treasury bonds. Be careful as you buy which bond to buy. Engage someone. You are deploying a lot of money. Engage someone. There is so much to learn. We're going to learn it slowly, but it's going to be a fruitful journey. Thank you.